So, welcome to everybody. Good morning. My name is Elisabeth Robineau. I'm in charge of the Finance and Administration Unit. I'm very happy to have you here today for our financial workshop. We will start, although we may have some other people coming in a few minutes. I would like to welcome you all and thank you for joining this session. We have also some participants that are joining online. I hope that the connection is good and everything works and they can hear us. I would like first to inform you that our Executive Director, Mr. Bart Biebuck, will do a few welcome and introductory words, and then I'll take over the micro again. Bart?
Yes, good morning everybody and welcome in the FCH. Maybe for some of you, you know this place already. For the other one, well, welcome here. Also to the viewers online, I'm very happy that you can follow this workshop because indeed it's very, very important. I think we need to make sure that in our projects that we correctly put in the accounts all the costs or the ways that we're doing, because every project is very different sometimes. We see sometimes with you work with subcontractors, or sometimes you buy them, you own them. So there's a lot of different ways, and I think for each company it's always a bit different. So that's why today this kind of financial workshops are an ideal chance for you to really ask questions, because what I would like to avoid is that during the audits that we have later on, I mean, that there's a big problem. And I think we don't like that, you don't like that. Basically, there's nobody who likes that, only the audit firms maybe. But I think we have to avoid. You also like it? Okay, fine then. But I think in principally we just have to avoid that we have a lot of mistakes founding, and then we have to pay back money, or we have to receive back money. I don't know, there are many things. So please ask questions, because this is the whole setup. Please ask a lot of questions. If it's something is not clear, ask it again. And we have a whole team here of my financial officers. Of course, this is Elizabeth, which is the head of the unit, but we have a lot of other ones, and our legal advisor, our accountants, and they are all here. So ask questions, many questions, because we have to make sure that everything is financially sound. Okay. So I would like also to thank my team to prepare this workshop. This is the third one, I think, the third workshop now that we have, under Horizon 2020 at least, the third workshop. So you see that we are becoming a routine now, and we have a lot of learnings already, because this is a third one. So we have a lot of audits already had under Horizon 2020, a few at least. We had some learnings from that, so we also incorporate all those learnings already today. So for your benefit. Okay, so have a good day, enjoy it, and if there are any issues, well, I think Elizabeth will help you. Thank you.
Thank you very much, Bart. So, as Bart mentioned, the aim of the workshop today is that at the end of the session, the Horizon 2020 cost eligibility rules are all clear for you, and that we have answered all your questions, and that you have all the answers that you need in order to allow you to prepare and submit error-free financial statements. The way we have designed the session is both through presentations with theory, and then questions that we will ask you to participate to. And we will have an interactive session also in the afternoon. Before going through the agenda and technical aspects, I would like to first introduce our team and the speakers. So if I go from the left to the right in the room, Nora Ovcharova is a financial officer. Loan Nguyen is also a financial officer. So they will both cover the personnel costs aspects. Then Thanos Batsilas, financial officer, he will go through other direct costs, meaning travel, consumable, equipment. We have also Georgiana Buznosu, who is our legal officer, and she will speak about contractual aspects and third parties. Antonio Requena, who will be our first speaker and will present the basic eligibility rules under Horizon 2020. And I'd like also to welcome and thank Frank Zander, who is a partner in KPMG and has experience, of course, with audits both under FP7 and Horizon 2020, and who will be our main guest for the afternoon session. So, as we commented, part of the session today is through questions and answers, and to that effect, there are barcodes. So the people present in the audience have the barcodes on the table, and so you just need to scan with your smartphone to have the proper question. And for the people online, it's the same. They can do through the computer or then by typing the reference that is on the slide now. I would like maybe to show now the agenda. So can you put well, otherwise you have the agendas on your table. We will start with the presentation on the basic rules for eligibility in Horizon 2020. Thereafter, we'll have a session on personnel costs to cover various aspects that will be introduced by Nora and Loan. We will then continue with a presentation on third parties. And then we'll have a lunch break, so it's a bit changed compared to the draft agenda that we had done before. There will be no coffee break in the morning, but we'll have about an hour 15 for lunch from 12:30. And in the afternoon, we will start with the presentation on other direct costs. And thereafter, we will have an interactive session with Frank Zander. The idea there is to go through all the requirements, practical aspects, and hints that you need to know in order to ensure that in case of audit, you have all the elements and all the evidence necessary to, well, give evidence and justify the cost that you have declared. And it's mainly also to ensure that hopefully, in case you have an audit, it's also with no finding. From a logistics point of view, you have outside the restrooms and coffee and lunch corner. And regarding the questions, I would like to kindly ask you, so the questions coming from you, to keep them for the end of each presentation. The audience that is online will also have an opportunity to put the questions in writing, and then we will, at the end of each session, respond to the various questions that you have. So, well, thank you very much again. I'm very happy to have you all here. I'm very happy also that we have people that are both participants and coordinators and different types of projects in transport area, in energy area, innovation and action and research projects. So I think it may be good also for the exchange among ourselves. So thank you very much, and then I will give the floor to Antonio Requena.
Good morning, everyone. Mine is a short presentation to introduce you the general eligibility criteria. These are the conditions that costs have to meet in order to be considered eligible. We base our grant, or the final amount of the grant is based on your eligible cost. We apply to your eligible cost a reimbursement rate, and we calculate the final grant according to that. What I'm going to present is going to be explained in detail by my colleagues during the whole day, but I wanted to show you only in 2 slides all these 7 criteria, these general criteria we have, also for you to have them at hand anytime that you are going to report or anytime you are going to incur in a cost, to check yourself, to ask yourself whether or not they will be considered eligible by us. So the first one is that they must be actually incurred by you, meaning that we don't accept estimates or budget. You have a budget of 20,000 euros in personnel cost, and at the end of the reporting period, you say, okay, there were 2 guys working for the project. I know that more or less each of them is 5,000 euros per month. They have been working 2 months. I'm going to claim the same as the budget, 20,000 euros, because more or less it could be the same amount. Even I have spent more, but okay, I'm not going to do my calculations. This is not correct. You need to report costs based on actual cost. We don't have too much problem whether this, we don't have a problem at all whether these costs are higher or lower than the budget you foresaw, but you need to claim actual. They must be incurred during the duration of the action, meaning that we don't accept costs incurred either before or after the action. We have a few exceptions for this rule. For instance, sometimes you are supposed to submit a certificate on financial statements, depending on the amount you claim at the end of the project. If this is the case, for this certificate, for the cost incurred for this certificate, because you are going to, the auditors are going to work after the end of the eligibility period, for this cost, these are considered eligible, although after the eligibility period. And there are some other, but as a general rule, costs incurred only during the eligibility period of the action are considered eligible. They must be indicated in the budget of the action. When you submit your proposal, you submit a budget, Annex 2, in which you describe all the items you were about to, you consider that were needed for the project. So we are going to compare at the end of the project that what you are claiming is the same or appears in the budget. Again, if you claim something that doesn't appear in the budget, if you provide some explanation for that, if we consider that it's needed for the project, we are going to accept that. If you see that you are going to incur in major deviations, maybe it's better to ask your project officer for an amendment. When we have an amendment, we have also the budget that is amended, and then we can compare at the end your final cost with this budget that has been amended, and we can accept the cost without problem. But costs that are not in the budget is more difficult for us to accept. They must be incurred in direct link to the action. Imagine that you have a conference. I mean, you have in the budget you have a budget for travel, for conferences. So you comply with bullet point number 3. You went to the conference and you spent 5,000 euros in the conference, actually incurred by you. This conference took place during the duration of the action. You comply also with point 2. But this conference is also related to fuel cells and hydrogen, but you didn't present absolutely anything. You were there, you were listening only to the speakers. There is no connection to the project. You didn't submit any abstract. You did absolutely nothing for the project. For your knowledge, it's perfect, it's beautiful, but this is not in relation to the project. We are going to declare this cost ineligible. This is only some examples. They must be identifiable and verifiable, and they must be recorded in your account, meaning for us that they should be expenses. Imagine that you pay today 20,000 euros to a supplier for equipment that you are going to receive in 3 months' time. Today, these 20,000 euros, they are not eligible for us. Why? Because this is not an expense for you. When you receive the equipment in 3 months' time, you are going to start, as from this moment, you will start depreciating the equipment, you will start incurring expenses. As from this moment, you can claim these expenses to us. But today, even if there is a physical transfer of money of 20,000 euros, which can be perceived by you as an expense, it's not. You will claim these expenses really when they are expenses, meaning when you start depreciating the equipment. Comply with the applicable rules in laws on taxes, labor and social security. I'm not going to spend my time here, so this is taken for granted. And be reasonable, justify, and comply with the principle of sound financial management. Meaning that, for instance, you have in these kind of actions, you have meetings, you have a kickoff meeting, you have technical meetings, some events, and it's justified for us that the organizer of the meeting provides the lunch or the dinner, but a bottle of wine for 100 euros, we don't consider that this is sound financial management. So again, it's common sense. So these are the 7 basic principles that will be further developed by my colleagues the whole day, but only for you to have them at hand any time that you need to report or you need to incur in any cost. And as Elizabeth said, also my executive director, we want this seminar, workshop, whatever, to be interactive. So please participate, please ask any question. In order to foster interactivity, we have foreseen this polling system. Everything is anonymous. We are not going to keep any data from you, not your mobile phone, nothing. The IP address of your computer, if you decide to vote by computer, absolutely anything. We will keep only the answers during today, only to show them the answer and to further comments on the answers, and that's all. So either you can already scan the code and keep a browser session open in your browser, and then when the questions appear, you will see how the question changes according to the question that appears in the screen. Or anytime that there is a question, there will be the same barcode in the screen, and you can scan it at that time, and the question in the screen will appear in your mobile phone or your computer to answer. And that's all from my side. I pass the floor to Nora.
Good morning, everybody. Once again, we're happy to have you here, and also good morning to the online participants. We hope to answer all the questions today, the ones we know and the ones you might have. So after the presentation of the general eligibility criteria from Antonio, we'll spend some time on personnel costs. What you need to know about that, different types, situations, cases, how to treat them. So we will do a joint presentation with my colleague Luan. I will present first more generally the scenarios possible and the actual personnel costs, and then she will continue with the average personnel costs and some other specific cases. So we have a presentation of some theory and some questions incorporated into the theory, where we would ask you to vote and to tell us your opinion, what would be the correct answer. Now, in my next slide, I give you the overview of the presentation. So the first 6 slides will generally focus on classification of workforce contracts. We can have different people working on the project. They can have different relations with the entity, with the organization. Depending on these relations, they could be treated in different way in terms of budgeting and reporting. The second part is really the maths calculation of hourly rates in the different scenarios, and then we will tackle some specific cases which might be of interest for you. So the first, classifying workforce contracts, we have tried to present here the 5 basic questions that you need to address, to answer yourself before even developing a budget, because that would help you develop a realistic budget and in a way place the respective personnel related cost in the respective category. The questions we have put are: is it an employment contract with the company or with another entity? The answer could be yes or no. The answer would basically guide you how to treat that cost as a personnel cost per se, direct employment contract, or maybe a seconded personnel from another entity. Another important question: is it a direct employment contract with the person himself, herself? That's an important question for Horizon 2020. Why? In the case of direct employment contract with the person who is working, so the traditional employment contract or contract with a natural person, basically you have direct relationship between the beneficiary and the person working for the beneficiary. That is personnel cost. However, if at the time of the proposal you also specified that you have most of the resources, but you also envision to bring some other resources for the implementation of the project. And then you do this through hiring people from an HR agency. Then you basically have the contract with the HR agency, not with the person. So then the answer to this question is no, you don't have direct contract with the person. You have contract. You have contracted the person via the HR agency. That would qualify the respective cost to be classified as probably purchase of service or could be subcontracting, depending on the significance of the task. Is it an action task or is it something auxiliary helping you do the task? So these costs, if you do not have direct contract with the person, that would not be personnel cost, but it could be one of the other two options, and I'll show you where to report. Another important question is, does the contract envision exact working hours? Could be working hours per day, or could be hours per week, for example. So do you have specified working time? If you do not have the working hours per day or per week specified in the contract, this will lead your choice of option of annual productive hours. So if you do not have any hint of how many hours per day the person should work, then you apply a safe option, which I will show you later. Any in-house consultants, and how are they treated? Are they working on deliverables, or are they basically like your own employees doing part of the task and also filling in timesheets regularly as your own employees? The answer to this question would help you classify correctly. Doing task would probably lead you into budgeting them as subcontracting, while if they're treated like your own employees, that would probably be more of a personnel cost. One final question, is there only one contract with the person or are there additional contracts? This question leads you to decide where there would be any additional remuneration for project-based work to be considered for the personnel costs. Now, how to really budget those costs? So if you have employees or if you have natural persons working for you under direct contract, or if you have a seconded engineer or seconded researcher, those would be direct personnel costs. So that's A1, A2, A3, where you would put them. Also here would fall the SME owner and the average costs. So these are direct personnel costs. However, if you do not have direct contract with the person, but you hire some administrative support, for example, for your project, that would be other direct costs, goods and services, in the sense of you're buying a service. If you, however, have someone doing an action task for your project under additional contract, the action task would make this cost eligible as subcontracting. So these are the three options where you could budget the personnel-related costs and report them afterwards. Now we continue with few quiz questions to see how well we understand what I just tried to explain. So, as Antonio explained, we will show you the question. There are 2 or 3 possible answers. We'd expect you to vote, and then we can comment on the answers. So we have a company, PM abbreviation, beneficiary in a Horizon 2020 project, and they need some additional help to implement the project, additional to the people that they have on their own payroll. They have a total of 5 personnel working on the project, and the project manager from their side is actually a person seconded from an affiliated company, sister company from the same group. And that person is paid by the beneficiary, in the sense of the beneficiary covers the costs of that person working for them based on actual hours and work. The person basically has the contract with the mother company, with this sister company PMA, but is seconded and working for PM. How, in which category do PM report these costs? Now you have 1 minute for voting, and then we can comment on the answers. Okay. Yes. As we are watching the figures change, we see that there are more votes coming in, or maybe some responses have been changed. Now the voting is closed, I understand, so the 1 minute for voting is over. The final situation is 61% voted for personnel and 39% for other direct costs. Well, in the case of the seconded person working as project manager, that is a personnel cost per se. Why? Because the person is seconded from the entity and from the other entity to this one, and there is direct employment contract with the person. So seconded personnel, if you remember the previous slide, is basically A3, seconded persons, direct personnel cost. That's where you are supposed to budget and report those costs. Question number 2. The same company, again, 5 persons working on the project. One of them is an engineer who was hired from the New Start Human Resources Agency to complement the engineering staff of the company per se. So, in that case, you should first answer the question whether there is direct contract with the person or with the agency, and that would probably guide you to the correct reporting of this cost. I've given you a hint already. We have 2 options, personnel or other direct costs. So which one we choose? The person is provided as resource through the New Start Human Resource Agency, and yes, we see more votes coming in. Okay. Yes, so the voting time is over and we see the final result, which is 92% and versus 8% responses for personnel. The guiding question was, what is the type of contract? Is it direct contract with the person or through another entity? There is direct contract with the HR agency, so the correct answer would be, as you have correctly guessed, This is other direct costs, purchase of services, basically. So if you have additional people helping you do the project that complement your staff, and you get them through contract with an agency, this is other direct costs services. Similar scenario, which is 5 persons working on the project again, and one of them is the in-house consultant, Mrs. N, who had won the tender to implement and deliver Action Task 6.2 Web Design. Action Task 6.2 Web Design, the way it is spelled, would mean that this is an action task clearly identified in the description of action. So it is task in the project already described in the proposal. We have an in-house consultant delivering a product. What would be the correct answer in this case? Is it ODC, other direct costs services, or would you treat it as subcontract, doing a task? Okay, more and more votes coming in. The web design is clearly identified as a task in the project. And you have a contract with the in-house consultant to deliver that task. So here we have the final result now, which is 68 to 32. Now, in the case where the consultant or the contractor is implementing a task under the project, that would be a subcontract. Why? This is clearly identified task under the project. The web design is identified as a task. If the web design was a minor, supplementary, auxiliary something, not mentioned in the description of action, or if it was part of it, helping you do a major communication task or work package, that could be considered as contract for services. But here, the subcontractor is clearly doing a task identified in the description of action, so the proper way to treat it is subcontracting. And the last case is, there is a SME company, ABC, who are performing the initial life cycle analysis needed in support of task 5.4.3. It's a one-person SME-owned company, which would mean the SME owner would be the person working on that assignment. The assignment is auxiliary, helping do the task, but it is not the major task in the description of action. How would you report the costs of the SME owner? Having in mind, we have contract with the SME company, no matter that the SME is owned by the same person who is doing the work, but we have a contract with the company first. And then the task is identified needed in support of, so it's not the main task listed in the description of action. Yes, we register more activity and it goes in the right direction. So, sorry, the answer, 92% gave the answer that this should be treated as other direct cost purchase of a service. Yes, why? Because it's a contract with the company of the SME owner, and the SME owner is helping you do the action task. They are doing something minor insignificant to help you implement the action tasks as listed in the description of action. So in case there is no deliverable, no clear task identified in the description of action, this could be contract for services, other direct costs. In case it's a major part of the work that you subcontract, major in the sense of identified in the description of action, only then you could consider this as a subcontract. So voting is correct. Well, okay, then maybe I can.
Okay, please give a mic.
Yes, we can. We can have your question now.
So if you allocate to the wrong personal cost or subcontract, what the hell will happen if you allocate it wrong?
That's a very
That's
good question.
It's a cost.
Thank you for asking this question. Now, first, I mentioned proposal. So at proposal stage, when the proposal is positively evaluated and we go into the process called grant agreement preparation, we might discuss with you what exactly you mean there, and to ensure that the costs, the budgeted costs, are properly classified. So that's one step where we could reclassify the cost based on your explanation. What you mean by that? Then at reporting time, basically we again look at what you're reporting to us and say, wait a minute, why do you put this 200 of painting the car as subcontract? We think this situation of really putting the FCH logo on the car is not a major task in the project. It is something auxiliary, part of your overall communication dissemination package. So we might advise you to reclassify at that stage. And the final stage is when the auditors come, they also ask the same question. Is this Odyssey, or maybe in fact you had a subcontract? And they are sometimes in the best position to judge because they are with you, with the company, doing on-site audit. What we try to do is really to clarify all things during grant agreement preparation, the so-called gap phase. Then at reporting, if we have doubts, we may again try to see if all is reported correctly. And as our director said, we try to avoid audit errors.
So you are totally wrong what you said in the setup phase of the project, that one should discuss whether it more subcontracting or other direct cost nature wise. I would say the more risky case when it comes to an audit is that you identify something as being another direct cost of services, but at the end it turns out to be a subcontracting, because then it falls back into the eligibility criteria, saying, is it really identified already in the budget that there was a subcontracting case? So this is probably the more risky case then, and therefore identifying the subcontracting cases correctly already in the budget phase is, in my opinion, the most important thing in that context.
Thank you. Indeed, that's the more risky case for the beneficiaries. However, we've also seen cases where contracts are listed in the subcontract category, so we try to avoid both. But again, for the beneficiary, the more risky case is definitely what the auditor just described.
And as a practical consequence, the problem if the auditors identify that something that you have declared in other direct costs goes to subcontracting is that you are going to lose the 25% on subcontracting, on indirect costs.
Indirect cost, in fact.
So this would be for you the practical consequence that we will ask you to return back this 25% of that you applied incorrectly to other direct costs and that we cannot apply to subcontracting.
Okay. Now, with the help of my colleagues, I think we've covered all the aspects of the question, even the risks, the inherent risk of losing the indirect costs. Side comment, direct costs, which is personnel and ODC, bear these 25% flat indirect costs, and the subcontract does not. Why? Because there is the assumption that the subcontract had the profit margin anyway. So make sure you do it properly at designing your project. And again, we can help as much as we can, asking questions and trying to understand better what you want to do. Now, we go to the personnel costs calculation, and we start with the very general formula, which is known to all of you. You have seen it in different presentations in different colors. So there is not much to say here other than actual personnel costs shall be reported. That's the major eligibility criteria for all types of costs, as mentioned by Antonio. And the actual personnel costs are basically the hourly rate multiplied by the hours spent in the project. Starting from this very general formula, let's see what is important. And we focus a bit on the hours spent in the project. That part seems quite easy and understandable. However, there are a number of issues that arise in the application, so we would like to point out a few important things. So time reporting is really crucial. Why? Because only the actually reported hours needed for the project, clearly documented, are acceptable personnel costs for the project. So auditable time recording would mean that if you report a number of hours, these need to be supported by timesheets clearly identifying that this time is time the person spent on this project, verified, validated by supervisor with some hint of what exactly she did for the project. Key is the control environment. Yes, there should be a control environment to validate that this time was really spent on the project. One simple thing is the supervisor in that case. The problem of partial time reporting would basically mean that your timesheet, and I'll show you templates of timesheet right now, the timesheet hours reported should basically reconcile with the time recording system of the entity, which means if in this month you reported that you worked on the project 5 days in the first week, and then the company time recording system shows that you were on annual leave, that simply doesn't match. So it should reconcile with the official records of annual holidays, statutory holidays, sick leave, other leaves, and work-related travel. Obviously, if you were going on a mission for Project C, you are not supposed to be able to record hours for Project D because the mission is related to another project. 6 minimum requirements for a timesheet and a template. These will be illustrated. Let me do it right now. Now, in the past, you might have seen 7 minimum requirements. Now they're listed as 6 bullets. They are still the same. So these minimum requirements are nothing too difficult. They're quite logical because they basically say you need the title of the action, so the project name and the project number. That's the first line. Beneficiary or linked third-party name. Okay, that's the partner who is doing the project. Name of the person working on the action. That is the personnel basically reporting hours on the action, and then the hours per day in this example. Then short description of the activities done for the project. That basically helps to reconcile for which work package you worked, describing that you did some kind of reporting, which could be management, some time of public presentation, which could be dissemination work package. Then it should be signed by the person, and it should be signed by the supervisor of the person. There could be only a case where no supervisor exists, where this last bullet could be avoided. For example, a one-man company obviously doesn't have a supervisor. but the rest of the requirements should be met. So the timesheet should have all those details to allow identification of the hours as related to the project, needed and directly related to the project. That's the purpose of the timesheet. So again, that is needed. This is an hourly timesheet. There is the option also to do it on monthly basis, which is yet another simplification. But the same requirements apply. Project name and number, beneficiary name, which is beneficiary and linked third-party name, name of the person, type of personnel also, number of hours, work package, date and signature of the person, and date and signature of the supervisor. These are model templates. So anything that addresses the 6 minimum requirements as a timesheet system, which might exist in your company, could serve the same need. You are not obliged to use exactly this, but the minimum requirements should be there. So there should be an option for anyone auditing the personnel time recorded on this project to really identify that these hours relate to the project and that there is clear link, there is reason why you report them under this project. Good time recording is only one element of the picture. It needs to match actual activities reported. Now, this works both ways. For example, if in the narrative report you say, not much work was done in work package 1, and then in the time reporting I see 93 man-months in work package 1. These simply do not match. I mean, if there was no work in work package 1, then either these man-months are not work package 1, or the narrative report is wrong, or something is missing, or the man-months are not at all for this project. So there could be many questions, but such a discrepancy would definitely lead us to ask the question, what do you mean? You did nothing and you spent 93 months? No way. Okay, these we already showed, and there is one additional simplification, which is the declaration on person working exclusively on a Horizon 2020 action. It's available on the link that you see there. And in the annotated model grant agreement, in fact, you have the same link. It is also, in the past, it was only PDF format. Now it is open format, so which means you can edit it, download and edit it, do not need to recreate it. What's the usefulness of this? In case a person works really 100% only on this project for more than 1 month, 1 full month, you may use this declaration. So if you had someone working on the project for 3.5 months, then starting to work on many different projects, and then having also another 2 full months at the end of the reporting period, again working only on this project, you may use this declaration. However, you can use it only once per reporting period. So in that situation, the logical solution would be you use it for the first 3.5 months, and for the rest of the time you do time reporting. It should be used for the whole reporting period in the sense of at least 1 month, only once per reporting period, and it needs to be signed also, so it resembles the timesheet. Question, yeah, that's the document certifies that someone has worked for the beneficiary 100% during this period. So it's either the whole reporting period or the respective months. And again, you can use it only once for a reporting period. To illustrate this, we have a simple question, which is 18 months period, normal duration, a project of 36 months. Generally 2 periods. In the first period, we have the lab technician, Mrs. Light. She worked 2 months full-time for the project in the beginning, and then she distributed her time between these and other projects. What can she use to report, or what the beneficiary can use to report her costs to the project? 3 possible answers. The first one, to submit the declaration for the whole period of 18 months. Another possible answer, prepare timesheets for the whole period of 18 months and add the declaration. And another solution could be declaration for 2 months plus timesheets for the rest. Now let's vote to see what you would consider as the correct answer. Okay. Yes. Okay, we see more votes coming in. Maybe, and that leads to this change here and there. I think our time is almost over for answering this simple question. So, yes. Now, the choice of answer A. I hope this answer was given by one of my colleagues trying to mislead you. Because that's a wrong answer. The 13% answering B, happy to see that, yes, because that's an option. It's a bit of an extra work for you. Let's have a look. Prepare timesheet for the whole period plus add a declaration for 2 months. Now, okay, the timesheet for the 2 months of exclusive work on the project and the declaration definitely should say the same. But if you are really certain that the person worked 2 months, you can use the declaration for the 2 months, and then the rest of the period, 18 minus 2, for 16 months, you can do the timesheets. However, it's possible. You just do extra timesheets for 2 months. And the answer that most of you chose is C, which is the correct answer. One declaration for the exclusive work on the project and timesheets justifying all the rest of the hours. After talking about the time, we focus a bit on the hourly rate, which is another important component of the overall multiplication for personnel costs. So the hourly rate is basically the annual personnel costs divided by the annual productive hours. Again, a formula which you have seen in many other presentations or even used in your normal life. Regarding annual productive hours, this is important in terms of Horizon 2020, had in the beginning few changes compared to the previous programs. So in Horizon 2020 you have 3 options for annual productive hours. And the options are as follows. The first option is the fixed 1720, 1720 hours. That can be used by all beneficiaries in all the cases, and it's not questionable. This option is definitely the only one to be used in case your employment contract doesn't say anything about working hours. The national legislation also is silent about that. There is no collective labor agreement saying in mining we work 7 hours per day. So if nothing says how many hours per day you should work, and you cannot identify any workable hours, any basis for productive hours, this is the only choice you have. In other cases, you can also resort to that option, and again, it is considered as fixed, not questionable, and can be applied by all beneficiaries. Individual annual productive hours, that would basically mean you do the individual calculation for productive hours for each and every person. Now, this definitely requires much more work, but in the end of the calculation, you may end up with a scenario which is more beneficial for you. For example, you may end up with smaller number of productive hours, which could lead to a better hourly rate. However, this option requires really every part of the calculation to be supported by sick leave, by other non-productive hours, and I'll show you a calculation how it works. So option 2 could be more beneficial, but it should be used in case you really have all the supporting systems and papers in place to justify such a calculation. It could lead to, for example, 1,500 hours. And the standard annual productive hours, this is another option which can be used at the level of the entity, basically saying you calculate a number of hours to be used for your entity, for your organization. Again, however, that calculation should be based on actual data from previous years, from the last closed financial year. And there is another caveat, which is basically that the standard annual productive hours for the whole organization or for a group of same type of employees in the organization shall be at minimum 90% of the standard workable hours. Workable hours is defined as all the hours you can work as per contract, which means deducting the annual holidays and deducting also the national holidays, which are specific for the country. So the standard annual productive hours should be at minimum 90% of this, and I'll show you an example. If they're less, if they're 85%, by the rule you're supposed to use 90%. You cannot go below 90. This is linked to kind of assumption that sickness, general trainings, other non-productive activities would not be much more than 10%, or if they're more than 10%, then your company is maybe a bit non-profit. Annual productive hours, option 1 and 2, practical presentation. So for option 1, there is not much to say. As I said, it's the fixed. It can be used by all and every beneficiaries. There is no calculation applied. You just use this to divide the annual productive, the annual personnel costs by this number, and you get the hourly rate. Nothing more to say. Option 2, individual productive hours. We have a calculation based on the last closed financial year. And here I would like to stress again, the last closed financial year. This means that you should have reliable data from the last year. You cannot use the current year if it was not closed. Last closed financial year does not mean audited. So if you have sufficiently reliable information based on your accounting closing the year, you can use that. However, in our case, we are using the year 2016, for example. Why 2017 is not yet closed? So as simple as the total days in the year minus the weekends, minus the annual holidays, minus the public holidays. This gives you the individual annual workable hours. Again, all the hours that person can work for the entity after deducting the weekends, the national holidays, and the days of annual leave mentioned in his/her contract. Then that option allows to add the overtime days or hours, which is added to the workable days because it's extra days worked, and to deduct training and other non-productive days, meaning team building, general meetings, or moving the office, for example, to another building. And then also deducting the annual sick leave. And we end up with individual annual productive days of 210. If the employment contract says 8 hours per day, that would lead to 1,680. So it might make sense to do this calculation for the person. Why? Because you are getting individual annual productive hours lower than the fixed and probably slightly better rate. Yes. So that's option 3, trying to illustrate option 3, which is the calculation of the hours using standard for the organization. We do more or less the same, starting from the year, then deducting the weekends, deducting the public holidays and the annual holidays, and we define the annual workable hours. The contract says 7.5 hours per day, so that would lead to 1,740 annual workable hours. Then, based on verifiable statistics for the organization, you deduct the average sickness days. It's a low rate, only 2 days per year. And you end up with the standard annual productive hours. Then we have to compare the standard to 90% of the workable to decide if you can use it as it is. In this case, yes, it is higher than the 90%. So in this calculation of trying to define a standard for the organization, you end up with a result of 1,725 standard hours for the organization. It is acceptable to use it, but is it wise to use it is another question. Why 1725 is higher than 1,720? So basically we can make two conclusions. This you define at the approach to report annual productive hours. You need to define or to decide on in the early stages of the reporting and to use it consistently for all the projects. Now, in our case, we see we can use the standard hours. However, the better option in terms of hours and in terms of effort is definitely to use the fixed 1,720 hours for all the individuals, for the organization as a whole, and to get slightly better rate. Is the option to be used depends on you, but it shall be used consistently. So basically you choose option 1, 2, or 3 and decide what is best for the organization. In addition, all the statistics that you use for calculating the hours should be really supported by proper documentation. So all the sick leave days, all the general training days should be identifiable in the timesheets and in the time recording records of the organization that we mentioned earlier. So choose one of the options which best suits your needs, and these are the ways to calculate the options. Then talking about the nominator, the costs to be divided by the hours. This is again a simple presentation of what you should include. Of course, you have the basic salary and all the mandatory extras or complements as identified by your contract. That would mean if there is hazardous or 30 hazardous allowance for working in a laboratory or in the mining industry, it's included. Then other payments not subject to the discretion of the manager or not related only to this project, like 13th month pay, which is the extra bonus for the year. And the social contributions and taxes due by the employer shall also be added to this annual personnel cost. Why? Because this is the cost of having personnel working on the project. The division of the two gives you the hourly rate. The hourly rate with the hours is how you report costs. Another simple example, following the presentation of the calculation of hours. Personnel costs for seconded researcher are based on employment contract. With Green University, however, the person works for another beauty university, so seconded person. He had, as we saw in this case, 1,680 annual productive hours in 2016, Very simplified presentation of the annual personnel costs below for the year 2016. What is the hourly rate? So you add the salary, all the allowances, bonuses, the social contributions, you get a total annual personnel cost. You divide it by the hours, which in that case we identified as 1,680. And this is how you get the individual personnel cost for that researcher. Similar situation for a PhD student who is treated as personnel also. So we are trying to define his individual hourly rate. We get his annual workable hours. A difference in this case, you see 35 hours per week. So per the employment contract of the PhD, he is supposed to work 7 hours per day for the entity, so his individual annual workable hours are less. He also did some overtime because that was mentioned in the contract. And then he had training and other non-productive days, and he was few days sick. So the individual annual productive days for the person, in this case the PhD, you see that. Then the basic salary and the contributions and taxes, not many bonuses for the PhD, at least not mentioned in the contract or regulated by the law. So you get the total salary, you divide it by the hours, and this is another example of individual personnel cost. A simplified one, yes, but everything very specific that you might have in your company should fall in one of these categories. So hoping that this is clear, and the presentations are as paper versions with you, and then we will upload them after the end of the seminar, of the workshop. So that would be available to you. We go to another specific situation, which is monthly hourly rate. With the revision of the annotated model of the grant agreement in 2016, there is also the option to report monthly hourly rate, which, following the basic formula, is based on the monthly personnel costs divided by the monthly productive hours. So there is one monthly rate to be used for each month. That gives you the flexibility to record and report per month. The monthly productive hours, however, should be 1/12 of the annual productive hours. That means you can use only option 1 and option 3 of the standard. The individual annual productive hours, option 2, is not allowed for monthly hourly rates because the monthly basically means that you do it more or less for the current year, and that is not closed in most cases with the individual hours. So only option 1 and 2, so you have either option 1 divided by 12 or option 3, whatever you define for the entity, divided by 3. And in case you have payments which cover the full year, those payments, like the 13th salary, in the monthly calculation shall be prorated. So if you have a 13th salary, only the fraction of that payment, which corresponds to the respective month, should be used for calculating the monthly personnel costs. Only the relevant for the respective month. So that's an option which was introduced in 2016 to allow more accurate, more beneficial for the beneficiaries' time reporting, in the sense of closer to the actual costs for the respective months. So that's also an option to be considered. How can you use it? Can you change between the options? Is my next question for us to jointly decide. Yes. Annual and monthly hourly rate, choice of method, basically. May a beneficiary use different methods, annual versus monthly, to calculate the hourly rate per full financial year or per month in their different grants for the same financial year? The possible answers are During the same financial year, a beneficiary may choose different methods for calculation of personnel costs for the different grants. Basically, do as you wish. And the second option is no. In the same financial year, a beneficiary may not use different methods for calculation of personnel costs for the different grants. They shall use one and the same method for all grants in the same financial year. If a beneficiary wants to change, there is such an option, but the beneficiary may change the method for the next financial year and for all the grants. I think I've given enough hints. Now let's try to vote. Oops, sorry. Where is my voting? Okay, the voting slide maybe disappeared. Let's try to vote with the presence in the room. What would you choose, option A or B? A, raise your hands. How many of you would like to do option 1? Change, choose as you wish. B? Unanimous answer, 100% vote for B. Yes, that's the correct answer. You are allowed to change, but this should be really a change of accounting practice, of usual accounting practice, and it should relate to all your grants and to the same financial year. So you cannot do one reporting for an EU project, another for a national, a third one for a commercial project. So usual accounting practice was one of the major eligibility criteria that we mentioned in the very beginning. I hope we've made it clear, and now I will hand the microphone to my colleague Luan to continue a bit with the unit costs and with some special cases of personnel-related costs, which might be eligible or not, depending on the situation. So, Luan, the floor is yours.
Thank you, Nora. Good morning and welcome, everybody. My name is Nguyen Luan. Thank you all for joining me at this session, and thank you also to people online who join us as well. So my presentation will be based on the average personnel cost and unit cost for SME owners without salary. So the SME owners are not receiving salaries. These unit costs are the only two forms of cost under the personnel cost category. But you have a third form of unit cost, which is internal invoices under ODC. This topic will be explained by my colleague Stanos later on. So for my presentation, for the average personnel cost, I have divided this into 3 points. First, we will have a short reminder of the main formula of today, the hourly rate. Then we will have the 3 conditions for applying average personnel cost. And finally, the calculation of the average personnel cost and 2 small quizzes. So as you remember, the hourly rate is obtained by dividing annual personnel cost and by annual productive hours. The numerator here is expressed in terms of cost, money, and the denominator in terms of hours worked. The numerator, annual personnel cost, is your basic salary, so 10 times the monthly salary, plus some mandatory extras, the allowance like the 14 month, the 40 month for summer vacation in some cases, the bonus, and what the employers pay for you as the social contribution and taxes. The 3 conditions for applying average personnel cost. The first one, this method should be applied in a consistent manner based on objective criteria and regardless of the source of funding. This is very important. The beneficiary can only apply it if it's in line with his accounting practices. So he may not set up a new average personnel cost accounting system, which applies only to EU projects or only to externally funded projects, is forbidden. On contrary, it doesn't mean that he must apply it. So it doesn't mean that he must apply average for all his personnels and in all departments. For example, he can have average for temporary personnel and actual personnel cost for permanent personnel. Condition 2, calculate the hourly rate using the actual personnel cost recorded in your accounts. So you should calculate the hourly rate based on what is recorded in your account. Excluded ineligible costs or costs included in other budget category. For example, some taxes which are not supposed to be included in personnel costs should be removed then. And for example, also travel costs should be removed as well. Beneficiaries whose accounting practices indicate indirect costs in their personnel costs should remove them as well, because it may be the usual practices in some countries, but here, as you sign the grant agreement with us, normally it should be included in the flat rate, those indirect costs. And condition 3, use one of the 3 options to determine the annual productive hours. I guess you remember it was the denominator in the hourly rate calculation. Again, I will advise you to use the option 1, the fixed 1,720 hours. It will ease your life and help you in the calculation. And it won't be challenged by the auditor when there will be an audit. So let's move to our example. Here's the basic thing. So the beneficiary employs 5 lab technicians and 3 senior researchers working for our project. But this beneficiary employs in total 9 lab technicians. Out of these 9 lab technicians, only 5, I guess you remember the picture, works for our FCH project. So what would be the hourly rate and what he should declare as annual personnel cost for this project? And he's very smart. He used option 1 for the denominator. You have here the individual personnel cost of the 9 lab technicians, and then the total. You have the total, you divide it by 9, and you have then the average personnel cost. Sorry. In order to get the hourly rate, you have the average personnel cost, you divide it by 1,720. You remember the option 1. Then you have the hourly rate, 23.72. You just need to multiply by the actual number of hours worked on the project. So you get then the annual personnel cost. Just one tip, this is incorrect. Why? Because the beneficiary has chosen option 1. So he must cap for the calculation of personnel cost, he must cap it to at 1,720 hours. But he actually, this employee actually worked 1,798 hours. Let's see. As you can see here, the personnel cost for this specific employee is capped at 1,720 hours because of option 1. So here we have a quiz. So it's your turn. It will be the researcher. You remember that the employer, the beneficiaries employs 3 researchers working for our project, but he has in total 6 researchers. It is the same way of calculating average personnel cost, but I will ask you then in which column is the error. And he also used option 1. You don't need any calculator. It's very easy. Ready? Okay, let's see what you have answer. So I see here that most of you have written the hours worked on the project. Actually, it's not that incorrect, but it's incorrect in the calculation because you should, of course, declare what is on your timesheet. You cannot change it. So you declare the 1,724 hours, but for the annual personnel cost calculation, the number is capped to at 1,720. That's the maximum for the annual cost calculation. And for the reporting, you report it on in the correct cell, so for the average personnel cost. Now let's move to the SME owner. Oh, no, we have another quiz. A beneficiary report average personnel cost for the 5 lab technicians and actual personnel cost for the 3 senior researchers. Is it correct? Can he do it or not? 1 minute, please. Time's up. Are you ready? Let's see the answer. Yes, it's correct. As I said, he can use different options, but for the same group of employees. Now let's move to the personnel cost using SME owners rate. So SME owners not receiving salary must declare personnel cost as unit cost. The calculation is almost automated. The only thing he needs to do is to declare the numbers of hours worked on the project. It is capped also at the maximum of 1,720 hours. Why? Because this number applies to a full-time employee. That's why. And the cost, the personnel cost, is equal to the numbers of hours worked multiplied by the hourly rate for the countries as fixed by the commissions. So this, the hourly rate is already calculated. He don't need to calculate himself. For the reporting, this number is already there, the hourly rate. So the SME owners not receiving salary only need to fill in the numbers of hours worked for our project. We have here a quiz. What are the minimum requirements for timesheet for the SME owner, and what are the maximum number of hours he can work, he can report to the project? 1 minute again. Are you ready? So let's see the answer. Okay. The answer is, of course, B. The minimum requirements are the same as for any timesheet, except the signature of the supervisor, because as his SME owners, there's no supervisor. And the maximum numbers of hours reported is limited to 1,720 hours. What is that? Yeah. Sorry. There's nothing. Yeah, I am using. Sorry. Okay. So let's move now to the specific cases, the bonus. Bonus is eligible if it's based on the financial performance of the organization. A counter example is the payment of the dividend to private shareholders. In this case, it could be some employees of the beneficiary. So this, the payment of dividend, this profit distribution is not eligible because only employees who have bought the shares are entitled to dividend. So it's not related to the employment contract, so therefore it's not eligible. The bonus should be also part of the normal salary and paid in accordance with the law, the employment contract, and collective labor agreement. We have here 4 cases. Let's see together. The company has made a profit of 19,000 euros. Each employee will receive a bonus, a supplement of 5% of his normal salary. So it's fine, it's eligible. On contrary, a beneficiary has reached a sales target of 200,000 euros. Each employee will receive 1% on sales. It's not okay, it's forbidden because it's based on commercial targets, not incurred in connection with the action. The third case, the contract fixed a premium of 1,000 euros for each research paper published in international research journals. That's fine because it's in line with the contract, the employment contract. And the last case, the national law authorized public universities to pay a bonus based on merit of the employees. This is eligible as well because this is in accordance with the national law. Benefits in kind. Benefits in kind are incentive to boost the moral employee in order for them to work hard. They are eligible if they are registered as personal cost in conformity with the beneficiary usual practice, and also if it's justified. For example, an IT consultant receiving a company car, it is eligible. Why? Because he will need his car to go to one client to another one. He won't use it only for private purposes. And condition 3, it should be foreseen under the law, contract, or labor agreement. Now we have a quiz for the PhD students related to the academic fees. So a PhD student has contract to work 35 hours per week for university. As per contract, the PhD has to pay a tuition fee of 4,500 euros and will receive monthly salary of 1,500. The contract also states that the PhD fee is waived against remuneration. So the PhD does not pay the fees to the university, but does not receive the 3-month salary. So the 3 times the 1,700. Personnel costs and fees are registered in the account of the university. So the question is the following: is the WEF fee to be reported under the project? So it's your turn. 1 minute, please. So ready? Let's see. Yes, it's correct. As it is waived against the PhD monthly salary as per the PhD contract. So 2 remarks for these academic fees. The cost of the students are eligible if it is work-related, but not training-related. It has not the purpose of helping the students to acquire professional skills. And the fees, or part of the fees, are eligible if the student contract includes the WEF fees as part of his remuneration. So it must state in the employment, the student contract, that he won't need to pay the fees, but on counterparty, he won't receive the salary. Teleworking. Teleworking is allowed if it is in line with the beneficiary's usual practice. And a system in place must be able to identify and record the numbers of hours worked for the project. We have now a quiz. So the quiz is this one. Mrs. A teleworks on occasional basis once a month. This month, she has teleworked 4 hours on the project. The system can only register a full day teleworking, so she registered a full day teleworking. Is it a correct way to report teleworking hours? 1 minute, please. So let's see the results. Yes, it's a no. Why? Because there's no system in place which could record the exact numbers of hours worked for the project. So let's move to the parental leave and long-term sick leave. The parental leave and long-term sick leave, they are eligible as part of the basic salary if not reimbursed by national authorities. Only the net amount paid by the ministry are eligible. This means that if the social security directly pays the employee, this cost is not incurred by the beneficiary, and so he cannot charge to us this remuneration. Otherwise, it will be a double charging. The condition 2 is that the beneficiary actually incur the cost, and 3, it should be mandatory under the law, labor agreement, and employment contract. So to summarize, the 5 specific cases are eligible if they meet the general condition general eligibility condition under Article 6. And finally, the recruitment costs are not eligible because the beneficiary is required to have the number of people working for him. If he needs to hire additional personnel, these costs are related to indirect costs and should be covered by the 25% flat rate. So the key points to remember are timesheets, the 6 minimum requirement, the hourly rate, our main formula, and reporting based on actual cost incurred. Thank you for your attention.
Just a question regarding contractors. If you're doing a manufacturing activity and you have a contractor, is a contractor's eligible under the subcontracting element of this or not?
My colleague Georgiana will cover the subcontracting cost.
Do you want to leave it for you, or shall I try? Okay, I'll try then. So, initially we tried to say that the difference between contracting and subcontracting is related to the fact what kind of task is done. Is it an action task? Is it something identified in the description of action? Or is it basically, for example, in the case of hydrogen refueling station, do you have someone putting cement on the place for you to be able to put the hydrogen refueling station? So if it is not clearly identified as an action task, as a significant action task in the description of action, but is something helping you, auxiliary, to help you do the action, then the proper treatment would be other goods and services contract, bringing the additional indirect cost of 25%. However, the most controversial case is probably web design. That's why I tried to use it. So you can have web design as helping do major dissemination, national campaign, and doing a small web page. Then it is not identified, for example, as an action task. In that case, it could be a contract. But if you have in the description of action 6.2 clearly saying, developing a web page for the project to be used for the Scandinavian region. Obviously, whoever is doing that for you is subcontract because you have it as a main task. The underlying philosophy is that the beneficiary should have the resources to implement the project. Occasional subcontracting is accepted here and there. Minor, yes, yeah, okay. In that case, my answer would be depending on is it an action task or not, and my feeling is no, the way you described it. It's, well, then let's try to define, is it a task or not? Okay, you have, yes. Mm-hmm. Then you bring people in. Okay, but that is you are contracting for auxiliary personnel how? Directly contracting the people or having them from the HR agency? Then, well, if you get those additional 3 engineers, for example, to help you in the last months of the project from the HR agency, you have the contract with the HR agency. You are paying to the HR agency. You don't have contract with the person. They may work same way as your own staff, doing timesheets and everything, but the important thing is you don't have contract with them and you are paying to the entity called HR agency. You put these contracts as other goods and services, you buy service from the HR agency. That's the proper classification. In terms of financial reimbursement or getting the 25%, it doesn't make any difference. But the proper way to put these engineers is OGS, other goods and services.
Thank you.
Nora, I just have a question on your slide number 21 for the PhD student.
Yes.
I have to wait.
What's the question? You remember
Yeah.
there were some calculations.
You made a calculation and then you reach an annual productive days and then hours of 1,526 hours. Is this possible?
Yes,
Because you are below the 90% of 100.
yes, but we are
720.
not trying there to calculate. I need one mic, maybe. Okay, but there we are not trying to calculate the standard. There we are trying to do the individual calculation for the PhD student. So we are doing option 2, and that was really an illustration. The standard is the whole for the entity. For the PhD student, we have him working 7 hours, and we deduct everything that we can see. 21 should be the slide. I hope we didn't make a calculation mistake, but let's go to 21, 21. Okay, nope, the PhD student, yes. So he works 7 hours per contract, 231 by 7, and then 218 by 7. Times 7, multiplied by, or times 7, whatever we call it. I think it's correct, but yeah, what's the question? Okay, yes, but it's this 90%.
For PhD student, it will be for all PhD student of the university.
No,
Same
no,
type of
no, no. It's a choice of option. Let's start from the choice of option. So we have the fixed. We don't question it. Then we try to do individual calculation per person. And this is an example of option 2. So this example of an option 2, we were saying basically implies a lot of thorough calculation per person to be supported by all the records. But it may lead you to a result like that. And thank you for pointing. Yes, it's below the 90%. And the purpose of option 2 is for entities, for example, who have a really very sophisticated and well-designed time reporting system to do the individual calculations per person and to be able to report the actual hours. In this case, not using option 1 and using option 2 brings better rate for the PhD. And we are not going into the standard yet there. We are doing this individually, person per person. The standard would probably give something else because might not be that beneficial for the entity. But again, this is the calculation person per person. And for this case, we have that number of hours. We have seen also situations where a proper recording of every non-productive hour may lead to 1,500 hours. If that is really supported by the proper timesheets and showing not related, that could be an option. But again, we are not applying the 90% here because this is not the standard. If overtime is not recorded, then should it be taken into account for the calculation of annual productive hours, and how? Well, if overtime is not recorded, I'm not sure how you would take it into account, because if it's not recorded, how do you know the amount of overtime? In our examples, we were showing 3 days of overtime, assuming that you really have timesheet records showing 2 hours here, 3 hours there. So if it is not recorded, yes. If it's not recorded, the answer is obviously no. And the company uses option 1. However, one person started working in the middle of the year and is working 32 hours per week. What would be the calculation for his individual annual productive hours? So a person started in the middle of the year. Taking that part of the question, the answer would be prorated. And then working 32 hours per week, that would be another prorating, because obviously the person is working part-time. So the calculation for his individual annual productive hours, I think we can do a bit of maths during the break, but middle of the year means prorating. So you take half of 1720, and then if the standard working week is 40 hours, that would mean additional prorating of 80%, for example. So person is working 80% part-time. That would be 80% of the half year, and that would be the hours by which you should divide the annual personnel costs of that person. The cost would also be for half a year, so applied to the prorated. Hope I've answered that question. And then?
If you don't mind, I would just like to add one point to that. I guess you are right that both incidences gives hint to a pro rata calculation. So starting in the middle of the year definitely would mean that you would just count the months that the employee is working, and then compare that with the full year, and that would give the first pro rata. For the second point, working 32 hours, for me it's just important to add it depends. It depends on the situation at the company. Just for an example, and that's not in that question. That's why I wanted to point it out. If the regular working time at the company for all employees is 32 hours, even if in national law generally 40 hours is foreseen, it would not give hint to a pro rata calculation. So you have to compare that with your usual surroundings in your company. So the 1,720 hours definitely apply for a full-time the employee, but full-time means compared to your circumstances at the company, and not directly to whatever is usually in your national circumstances. Just as a clarification.
I think that's all. So I'll pass to Georgiana to cover.
Hi. It's okay? Everybody can see? Yeah, okay, thank you. Good morning and welcome to the final presentation that will conclude the morning session for this workshop. So bear with me for a little more. This presentation will cover what we call third parties in Horizon 2020 in the grant agreement. And I will try to cover theoretical knowledge of what is the basics with all of them, and then go through some questions that will help you sediment the knowledge I'm trying to pass on to you with regard to the types of third parties, the costs, the eligibility, and how to properly include them in your financial statements. This is an overview of what we will look at in this presentation. Moving on to the first part of my presentation, it's a general definition of third parties. I can honestly say that I don't think there is one beneficiary in a grant agreement that does not use at least one type of third party. A contractor, a subcontractor, a linked third party. Everybody uses or has foreseen some additional help. How they can help is either by carrying out a limited part of the work for which you did not have the resources to implement it yourself. However, because it is an obligation under the rules of participation in Horizon 2020 to have all the resources to carry out such work, this, let's say, passing on can be only for a limited part as an exception. You can use contracts to get supplies of goods, or services can be provided to you to help you in the implementation of the action. Because of this general definition, in theory or in abstracto, let's say, they have been divided into two categories. Third parties that carry out work in the action, and those are the linked third parties and the subcontractors. And a second category, those that provide resources and the goods or services, which could be either the in-kind contributors or the contractors, the so-called purchase contracts that go under other direct goods, as Nora explained earlier. As of this year, we have a third category, which in practice would go under the first one. They're called international partners. The FCH-JU will implement this through its new model grants that will be applicable as of this year, 2018. And international partners will be able to carry out part of the work, part of the action tasks. So under the abstracto definition, they will fall under the first category, third parties directly carrying out work described in the Annex 1. But I will go through each type of third party individually. This is to give you an overview. So there used to be 4 linked third parties and subcontracts directly carrying out work. Yes, this is where the main difference comes, with purchase contracts and in-kind contributors that provide resources, and the new possibility to have international partners. Moving on to the first category, the third parties directly carrying out part of the work. For both of them, it is very important to know that linked third parties and subcontractors must be identified and included in the Annex 1, in the description of action, where you need to identify the tasks that they will carry out and the budget that you will pay for this. And of course, in the corresponding budget column in the Annex 2, where you have all the costs. Yes, it is the famous black table where you can see all those costs. Both of them need to be in Annex 1 and Annex 2. What happens if you do not have them? Usually, the costs that are not mentioned in the Annex 1 and Annex 2 are not eligible. That is why, as soon as you identify you have linked third parties or subcontractors that you use for the grant, but which are not already specified in the Annex 1, you should request an amendment in order to include them. However, for very special circumstances or exceptional cases, the grant agreement has foreseen one possibility to declare costs of subcontractors, even though you have not specified them in the Annex 1 at the time of the financial reporting. Say that it was an unexpected circumstance, one staff member had left and you had to replace them with another, let's say, not employee, but a person hired through a workforce agency, yes, but they work on the research and innovation tasks, so they directly carry out tasks in the project, and so they would be subcontractors. This was very last minute, you had to do it quickly, and you did not have the time to amend it because the reporting was already there. Then in the technical report, you have such a section called unforeseen subcontracting, where you can report the costs of unforeseen subcontracting in such exceptional circumstances. But you have the duty to explain and justify those circumstances in such a way that the financial officer and the project officer understand the circumstances and can agree. However, be aware that if you do report unforeseen subcontracting, you bear the risk of this cost not being accepted in the end. Whereas if you conduct an amendment, you ask your project officer and you see what is the best way to include it in the Annex 1. If it suddenly appears without ever mentioning it in the unforeseen subcontracting, then you best explain it to the full details so it can be assessed properly. So these are the 2 points you should remember. You should mention them in the Annex 1 and in the Annex 2. Now for linked third parties, what are they? The linked third parties are affiliated companies, are companies with a legal link to the beneficiary that does not limit itself to the grant agreement, that goes beyond. Usually it's companies which are controlled by the same company or control each other or are under the same control, direct or indirect control. Sister companies, mother companies, these are usually what we see in the grant agreements as linked third parties. The linked third parties have their own financial statement. They will fill in their own financial report that will be submitted to the beneficiary, and the beneficiary will submit his and his linked third parties together in the system. However, it is important to know that they have their own budget lines, their own financial reporting that must correspond to what was declared in the Annex 1. They must comply with the same participation criteria as the beneficiaries, meaning you have to come from either a member state or one of the countries that are listed as associated countries in Horizon 2020. They must comply with the same cost eligibility criteria as beneficiaries. And I think that's what you have to know about linked third parties. They declare their own costs, they report it, they have their own financial statement, they must comply with the same participation criteria. As for subcontractors, the difference between them, even though they both carry out work, is that the linked third party will charge its costs, whereas the subcontractor, the beneficiary, will charge the price. The price, because a subcontractor is based on business conditions, and it will be cost plus profit. Subcontractors, as a definition under the grant agreement, under Horizon 2020, are purchase contracts for goods, works, and services that are used to directly carry out tasks in the project, whereas the purchase contracts that I will come immediately after are also for supplying goods, works, and services, but which are not tasks in the project, but are adjacent, let's say. They help you implement the task while at the same time not being a task in itself. It is fine line, and the definition carry out tasks, not carry out tasks, can sometimes give room to interpretation or even debate, so to speak. But there are some clear-cut cases, and let's say the subtle ones are less and less. For subcontractors, what else do you need to know is that subcontracting between beneficiaries, subcontracting to affiliates, or the coordinator tasks cannot be subcontracted. Why? Because subcontracting between beneficiaries doesn't work, because each beneficiary should charge its own costs, not charge the other partner with the price and he puts both, because this might give rise into the project, and it's prohibited as such in the annotated grant agreement. To affiliates, it is the same question. Coordination tasks, I think it makes perfect sense. If you look at Article 41 that explains what the coordinator should do, you will see that those are meant for the entity who will take over the consortium and will guide them, will lead them, and will be let's say, the front office with the FCHJU, with the funding body, and this is their role. So, of course, this role cannot be subcontracting to a third party that is not even a part of the grant. What is also very important to know is that indirect costs do not apply to subcontracting. So, meaning the 25% do not add on top of the subcontracting costs. And I think, oh yes, I wanted to also to mention about framework contracts. If you have a framework contract that covers an action task, you can use that framework contract in the grant, provided that it was awarded on best value for money and absence of conflict of interest. Both subcontracts and contracts need to be awarded based on best value for money, and you need to document this. Now, how you comply with this, either you follow your own internal procurement procedure. There is no need to do a competitive selection. You can have 3 offers, or you can document it some other way. I think Thanos will cover immediately after lunch what does it mean best value for money in one of his slides. And most importantly, for contracting authorities, meaning for public entities, it is mandatory for them to comply with public procurement rules. So contracting authorities, by default, you have to comply with the national public procurement rules. Moving on to the next 2 types of third parties. We have purchase contracts. Yes, those purchase contracts for goods, works, and services that are not necessary to carry out directly a task, but which help you. They must also be awarded, like I mentioned for the previous one, on best value for money and no conflict of interest. If contracting authority, you have to award the purchase contracts based on compliance with public procurement rules. The 25% of indirect costs apply to purchase contracts. As examples, the annotated grant agreement already gives you a little preview. For example, the certificate for financial statements, that is a purchase contract. Using an IPR company to help you with the protection of results, that is a contract. Purchasing a computer. A contract for organization of rooms and catering for a project meeting. That is a contract, because while it's not a task itself, it helps you to implement the task. Yes. And then for in-kind contributors, For in-kind contributors, we have two types, free of charge or against payment. Now, what does this mean? It means that there is a third party who contributes to you non-financial resources, meaning they don't give you money, but they can contribute to you, they give you either seconded personnel, or they contribute equipment or infrastructure or other goods, either for free, meaning they give it to you at no charge, no cost, no invoice, or against payment, meaning I second personnel to you to help you in implementing the tasks, but I will give you an invoice for the salary of the person that I second to your premises, or for the infrastructure for the time that you will use. That invoice is eligible cost. Also, the cost of the third party in case of free of charge in-kind contributor is eligible. The grant gives you the possibility to charge the cost of the third party even though it was provided to you for free. You have to make a distinction between in-kind contributor and your premises as beneficiary or outside your premises in terms of indirect costs that may or may not be included in the in-kind contributor's invoice, for example. They second to you personnel, one researcher. He works on your premises. If he works on your premises, then the third party that contributes it to you has no indirect costs because you will charge your own indirect costs on top of that. If they are outside your premises, then gives rise to the indirect costs of the third party because they will consume, let's say, electricity or water or whatever that you will they have as indirect costs, overheads, but their indirect costs will be capped at 25%, the flat rate of Horizon 2020. That's the most important distinction that you have to consider. And as opposed to purchase contract, again, you see a distinction between cost and price. While the purchase contract, you pay the price for what you get, the consumables, the supply, whatever. The in-kind contributor, you can charge up to the third party's cost. So what it costs them, that's what is eligible under the grant agreement. Of course, purchase between beneficiaries. It is in principle not accepted because the rule is that each beneficiary who incurs the costs declares its own costs. There are some exceptions to this rule, but they are only in exceptional and duly justified cases, and these are to be discussed on a case-by-case basis with your project officer and with your financial officer. By default, they are not accepted. The same for affiliates. There are, however, like I said, exceptions. And finally, the international partners that I was mentioning to you as a new category, they are usually linked with one project partner, with a beneficiary. They have been introduced as of 2018 for the FCH-JU with the grants that we will start this year. However, they do not automatically apply for the past. If you have an idea of working with such an international partner, you have to request an amendment because you will not receive it by default. It will be an option that we will enable by way of an amendment. What is important to know about these international partners is they are not beneficiaries, so they do not sign the grant agreement. What is also important to know is that they will not have to do any financial reporting. It is foreseen, stemming from the Open to the World Horizon 2020 logo, let's say, where participation is encouraged in order to have aligned in the field alignment in the field of research and innovation, should you wish to work with a legal entity, a company, an institute, a university that is not in the list of associated countries to Horizon 2020 and thus is not eligible for funding, they can do tasks in the project, they can work together with you, we can identify them in the grant. We will not oblige them to do any financial reporting because, of course, if you don't give any funding, it's not fair to oblige them to report on their financial costs. They will, however, have to report on a technical, on the technical aspects. They will receive a PIC number. In the Annex 1, you will have to identify what tasks in the project they will do, and it's not necessary to have any link. Basically, the example of the annotated grant agreement is working with a New Zealand entity, for example. You have a framework where you have worked with them in the past, but look, for Horizon 2020, you did not have the possibility how to include them, how to work with them. Now they have come up exactly with this specific, very specific category. You used to have beneficiaries not receiving EO funding. This has been further developed and has matured in what is Article 14A, international partners, to give you the possibility to work under a structured framework with any international entity, whether or not they receive funding, regardless of the fact if they receive funding or not. Now, I think my next slides will pass on to a number of questions which will be replied with yes or no. Unless you have any other questions prior to starting, I can move on to the questions. Yes? Good. Sorry, I had an overview before I pass on to the quiz. This will be very helpful for you in your printouts. If the third party does work in the action, the linked third party, yes. Subcontractors, yes. In-kind contributors, no. Contractors, no. Why? Because they are adjacent. They provide resources, yes, to both of them, but no to the other ones. What is eligible? The costs for linked third party, but the price of the subcontractor. The cost of the in-kind contributor, but the price of the contractor. Do they have to be indicated in Annex 1, like I explained? Yes. Yes for linked third parties, yes for subcontractors, yes for in-kind contributors. For contractors, if you do not know who you're going to purchase from, you don't have to specify who your contractor will be. You just have to budget the amount, and when you will do your selection procedure and you know who your contractor will be, that's when you will find out, but you don't need to put the name already in the Annex 1. Indirect costs, do they apply? Yes to all of them, with the exception of subcontracting. How do you select? Well, the linked third party, like I mentioned, it has to be an affiliate or a third party with a legal link. The other one, best value for money, and for the in-kind contribution, we have a caveat. You cannot use this to circumvent rules, meaning you don't know how to declare some costs that are given by somebody. Don't abuse the possibilities that the grant gives you. And then you have the indication of the articles where you can read really, really so much in details that you will see that what I have told you is very little, in fact, as opposed to what is already there for you to consult. And I have prepared a set of questions which are answerable with an easy yes or no. The first question relates to subcontracting. And it states that the coordinator A has foreseen a subcontract for the design, hosting, and maintenance of the project website. The subcontract is explained and included both in the Annex 1 and in the Annex 2. Are indirect costs applicable to the subcontract? you can start voting. I think this is a very easy question. I will just give you 30 seconds. And then we will move on to the next. Well, I haven't counted, but in my opinion, 30 seconds lapsed. So, it's still shifting. Unless, yeah, one of my colleagues is playing with the results. Like I mentioned, and the percentage, I think, shows very well that the correct answer is no. So subcontracting, indirect costs are not applicable to subcontracting. The next question relates also to subcontracting because it's such an important issue that I thought several questions are needed for this topic specifically. Coordinator A, a body that is governed by public law, has foreseen a subcontract, the same subcontract, for design, hosting and maintenance of the project website. The subcontract is explained and included both in the Annex 1 and Annex 2. Does the coordinator, as contracting authority, have to follow public procurement rules? This is even simpler than the latter one, so 30 seconds also applies to this one. Actually, I can see the seconds here turning. So 10 more. Okay, time's up. Does the coordinator has to follow public procurement law? Of course, the answer is yes. They are obliged to. It is an obligation under the grant agreement. The next question relates also to subcontracting. Is the same coordinator A of our fictitious project that did not foresee any other subcontract than the design of the website. At the end of the first reporting period, it reports an unforeseen subcontract in their financial report for the following services: review of deliverables to be submitted on behalf of the consortium, verification of their completeness and correctness before passing them to the FCH. The question is, can the costs of an unforeseen subcontract be eligible? Yes or no? 30 seconds also. I think I explained this towards the first slide. Five more seconds and then we can look at the results. Okay. Can the costs of an unforeseen subcontract be eligible? Well, the answer is yes. Yes, but yes, if you have not included it in the Annex 1, if you did not have the time to ask for an amendment, you can still declare it at financial reporting as an unforeseen subcontract. You have to detail, you have to justify for us to do a proper assessment, but yes, it is eligible. The next question relates to the same idea, meaning coordinator A who did not foresee any other subcontract than that the design of the website. At the end of the reporting period 1, it reports the same unforeseen subcontract for the review of the deliverables to be submitted on behalf of the consortium and verification of their completeness and correctness. My question is this specific subcontract eligible? And I will give you a hint. This question is directed at coordinators. 30 seconds also. Okay. Can we move on to the result? Yes. Well, is this specific subcontract eligible? Okay. The answer is no, it's not. These 2 points are quoted as such among the coordination tasks in Article 41, where the coordination tasks over the coordinator are detailed with several sub-points that indicate to you exactly what you have to do as coordinator. So the correct answer is no, this specific subcontract is not eligible. We pass on to purchase contract and to case question number 5. And we've already passed the halfway through the questions, I can tell you that already. This relates to a beneficiary. Beneficiary B, who has foreseen a budget of 210,000 euros for consumables and supplies necessary for the project implementation. Beneficiary B wishes to purchase from beneficiary C of the same project one item, meaning safety equipment, that is budgeted for 30,000. Is the purchase cost for the safety equipment eligible? Yes or no, 30 seconds to vote. Ready? I can move on to the result. Still votes changing. Is the purchase cost eligible? The correct answer is no. It's purchase between beneficiaries, and the way to report this correctly is each beneficiary reports his own costs. Linked third parties and the purchase contract. We have another question. Is the same beneficiary B that this time works with an affiliate company called X? This company X is participating in the project as a linked third party and has foreseen in their budget, both in Annex 1 and in Annex 2, only personnel costs. Beneficiary B usually purchases wires from his affiliate X. The budget of B foresees a total of 13,000 euros for the purchase of wires. Can beneficiary B purchase the wires from the linked third party X as budgeted? It's also a yes or no question, like all of them that will come. You have 30 seconds to vote, and then we will see the answer. Perhaps I can pass on to the answer already. Well, can he purchase from his linked third party as budgeted? I think the majority voted that you can purchase from a linked third party, while, let's say, the principled answer is no. You cannot purchase from your linked third party, because why? The same as beneficiaries, linked third parties have their own financial statements and their own budget. So as a matter of principle, the linked third parties declare their own costs. So because they declare their own costs, they should put in their budget category the wires instead of the beneficiary purchasing it from its linked third party under the grant. It's true that there are exceptions, and in duly justified cases we do accept purchases from affiliates, but in this case, as you can see, there's no exceptional circumstance. There are just some wires that does not justify any special conditions. So my answer in this situation would be no. It is the linked third party that should budget the costs. Yes?
But the wires may not be a cost for the subcontractor. For the subsidiary. It may not be a cost.
Oh, well, we start from the premise that they are. That they produce the wires. It's not purchase from purchase from purchase from purchase. No, no, no. Let's say the X is the producer of said wires. Okay. The next question relates to linked third parties. 5 months after the start of the project, beneficiary B, the same beneficiary B, would like to add another linked third party to the project. They already have X, a French company, who is added as a linked third party, but also owns company Y, which is a US-based company. Can company Y be added as linked third party to the project? Yes or no question, quite easy and straightforward. Can they be added as a linked third party to the project? 30 seconds. I will consider 10 have already lapsed. Okay. Moving on to the answer, can Y be added? The answer is no. Linked third parties have to comply with the same participation conditions as beneficiaries. The US is not a part of the associated countries to Horizon 2020, and thus we cannot include them. They can, however, be an international partner. And our penultimate question, it relates to in-kind contributors against payment. The premise here is that a researcher is seconded to coordinator A by a legal entity, for example, a public research center, and this researcher works for coordinator A on its premises, on the premises of the coordinator. The public research center charges the researcher's cost, the salary and social security, total quantum to 70,000 euros, to coordinator A, who pays the invoice, thus reimburses it. The invoice from the public research center includes its own indirect costs. Are the indirect costs of the public research center eligible? With the caveat in mind that the researcher works on the premises of the coordinator. Yes or no, 30 seconds. Shall we see the answer? Still shifting. Are the indirect costs of the public research center eligible? No. No, they are not. Because for in-kind contributors, what you have to remember is if it's on your premises, then the indirect costs of the third party are not eligible. Why? Because they did not incur any indirect costs in relation to the project. They worked on your premises. So for us, it's only your indirect costs, not the third parties. However, if the situation were returned, if the researcher worked on the premises in the building of the in-kind contributor, the answer would be yes, they are eligible. And the final question is the same public, it relates to in-kind contributor, but this time for free. The same public research center makes available for free to the coordinator A the use of an infrastructure for testing activities. This infrastructure is used by the coordinator not only in the project, but for other research activities. Can coordinator A declare the costs of the public research center for the proportional use of the infrastructure as costs? Yes or no? 30 seconds to vote, please. Okay, let's see the answer. Most people voted yes, which is the correct answer. Yes, the costs of the in-kind contributor for fee can be declared. However, note that you might have to declare them as receipts as well in the case where they have been provided by the third party free of charge specifically to be used for this project. If they are donated with the specific purpose of the project, then the grant agreement tells us in Article 4 or 5, I think, that you need to declare them as receipts as well, but they are capped at the level, if this is the case, they are capped at the level of the cost. And this finalizes the presentation on third parties and the questions we had. If any other questions, if not, we can resume for lunch. Yes, no questions? No questions online? No. Okay. Well, thank you very much for your attention and bon appétit.
We will resume at 1:30.
We resume at 1:30, yes.